I often get asked the question, Drew, tell me about depreciation and tell me how it has the ability to reduce your taxable income. But before I do, I want to make it very, very clear. In my opinion, tax minimization is a benefit of investing. It's not a reason for investing. Unfortunately, many people have this misconception that you need to choose between a property that produces capital growth or a property that produces cash flow or a property that produces tax deductions. And the strategies that I personally adopt and I help my clients adopt is why not have all three? Obviously, you want to invest in real estate that's going to go up substantially in value. You want to invest in real estate that produces a positive cash flow so that it does not impact your after-tax lifestyle. And as I'll show you in this video, you want to invest in real estate that is going to reduce your taxable income. So I thought no better way to explain it than to show you a real life depreciation schedule and show you exactly what impact it has. So have a look at this video.
So here it is. Here's a real life depreciation schedule. In fact, this is a schedule that I've done personally on one of my properties that I've completed. So you can see that the depreciation schedule was done on the 7th of November in 2019. I've blocked out my purchasing entity detail and I've blocked out the exact address for obvious reasons. But you can see that the property is in the suburb of Woodalba in New South Wales. So as you can see through this report, it's very, very detailed. In fact, it's very specific to the individual property itself. The first thing here you'll notice is there's two methodologies that you can use when it comes to claiming back your depreciation. For me personally, I've always used the diminishing value method. But my advice is chat to your own accountant and get personalized advice around what works for your individual circumstances, whether that's the diminishing value method or the prime cost method. Or speak to somebody like Mike, who is more than qualified to give you advice around each methodology. But you can see it's a very, very detailed report, but this is what I wanted to draw your attention to. You can see the diminishing value method. In year number one, I can claim $17,012. Year number two, $24,253. Year number three, $20,693. Year number four, $18,796. And as time goes on, you can see that the depreciation that you're able to claim depreciates and gets smaller and smaller over time. But if I flick across here to my cheat sheet, you can see in year one, 17,012. Now, the reason that's a lot less than year number two is I can't claim the full 12 months of depreciation in year one because the property only completed in November, which means that I only get to claim 8 months worth of depreciation, not 12. But if you add that all up, you can see that in 3 years and 8 months, I can claim $80,754 in depreciation against my taxable income. It's a phenomenal amount that you can reduce your taxable income by. Think about it. You've got essentially 2 kitchens to depreciate, not 1. You've got 4 bathrooms to depreciate, not 2. So the tax incentives are phenomenal.
With this exact property, I purchased it for $888,800. Now, straight away on completion, I actually got an independent bank valuation done that came in at $1,060,000. So there's an excess of $170,000 of upside equity in this project. I've also rented the property out for $960 per week. That equates to about a 5.6% gross rental yield. And given today's interest rate environment, it's more than positive cash flow. And as you've seen in the previous video, over the next 3 years and 8 months, I'm able to claim over $80,000 against my personal income. So there you have it. You really don't need to choose a property that has either capital growth, has positive cash flow, has huge tax deductions. You can have a property that achieves all three. I hope you found this video helpful. As always, if you want to know exactly how I'm doing it and how I'm helping my clients do it, we're only a phone call away. Talk to you soon.